Friday, November 22nd, 2024, Maneco 64, home of alternative economics and contrarian views. So today we've got Clive Thompson on. And for those of you who are new to the channel, and we're getting a lot of new subscribers, and if you do enjoy the channel, by the way, make sure you subscribe. And Clive, he's been coming on the channel for 2 years, and we had a really big hit on his first interview back in November 2022 about the reset. And I just wanted to reintroduce Clive again for those of you who don't know. He's a retired banker, but private banker from Geneva. He worked there while he was in the business for 40 years. He's originally from the UK. And yeah, welcome back, Clive. How are you doing?
Hello, Mario, and thank you very much for having me back on your show. For your viewers who like skiing, the snow has arrived here in Switzerland. So everybody's welcome to come skiing if they can afford it. Of course, Switzerland's a very expensive country, but you get quality.
Yeah, you do. Definitely. Clive, we we've seen that China and Japan, they sold a lot of treasuries in the third quarter. That those numbers came out, I think, from U.S. Treasury quarterly data. And you've written recently that you think that debt is unsustainable, that we have a debt bomb, and that's what I want to talk about today and how that relates to the bond market because I've been looking at the bond market and I've seen that, for example, in treasuries, we are at key levels in terms of the yields, and also in the UK for the gilts. They seem to be holding up and not going any higher. I'm not sure if there's some kind of intervention there. But yeah, so let's start with the debt and something you said that something can't keep going on forever.
If something can't continue forever, it comes to an end sooner or later. Um, Perhaps I can share a couple of slides, Mario, if you let me.
Sure.
And I'll just bring up the first one. So I'm going to talk a little bit about the debt in United States and in the UK. Can you see the slide here? This is from the Office of Budget Responsibility in the UK. I don't know if you see the page. Is
Yeah,
that
I
showing?
can. I can. Yeah.
Uh, so uh, basically, we see that the Office of Budget Responsibility in the UK is predicting that the level of debt to GDP is going to rise to 270%. Currently, it's around 100%, or probably under the latest change of rules, they'll say it's less than 100%. We're going to see a huge rise in UK debt to GDP, which will put a burden on the interest payments which have to be made to the investors. Same thing out of America. This is from the Committee for a Responsible Budget in the United States, where they say budget reconciliation not be used, or should be used to reduce the debt, not add to it. And if I just read the wording from Mayor McGuinness, president of the Committee for Responsible Federal Budget, she says, the new Congress and administration will be inheriting a dreadful fiscal situation with near record and exploding deficits. The result of reckless fiscal policy changes made by both parties, automatic spending growth, and growing interest payments, along with true national emergencies. With the debt approaching record levels, well, it is at record levels already, and interest the second largest budget item, policymakers should be using reconciliation to reduce deficits. As a minimum, they should use that reconciliation to ensure that it does not add to the debt relative to current law. So we have a whole host of people, which I've just put up on the screen there, well-known people who are saying the debt in the United States is out of control. And as I showed you, it's out of control in the United Kingdom as well. Jerome Powell, his wording is saying that the growth in the debt levels is unsustainable. Other famous people have joined the chorus, Janet Yellen, Jamie Dimon, Ray Dalio, obviously Mayor McGuinness, we just read her words a few minutes ago, and there are, of course, several others.
Interesting, Clive, that Janet Yellen and Jay Powell have warned about it, and they're the ones who've made it possible for the debt to go up, which is a little bit like the burglar, warning you, oh, I might come and,
Yeah.
burg
The,
house.
they've they certainly, one could say, they've facilitated it. Obviously, the decision is from the government, but they're the ones who unlock the door so the government can get in and borrow all that money and keep spending. And of course, the appetite to reduce the spending or increase taxes is not very high. Uh, the who pays the taxes? It's the rich, it's the politicians. Well, they're not going to vote for Christmas. If the turkey's not going to vote for Christmas, and of course, it's very, very hard to cut the spending without some sort of revolution from the people who are getting all the welfare and the benefits. So it's a very tricky situation. I don't have a solution, but what I think what's happened, we're now out of control. And if you can see the two charts on my screen, one is of the UK projection of where the debt is going. This is from the Office of Budget Responsibility. And you see that it's a from the Fiscal Risks and Sustainability Projection, they call it. Which is from the Office of Budget Responsibility. You can see the debt to GDP ratio rising in a few years, all the way up to 300%.
Yeah, and Clive,
But
can I interrupt a second? That projection there, which is pretty much around now until, I don't know, 2030, 2029. That seems really optimistic. That line there is actually showing the debt going down as a percentage of GDP, and I don't see that happening. I'm sorry to say, this OBR chart is too rosy to me. It's too flat. And it's too they're kind of saying, oh, it's only going to be in 2070 that things are going to get worse. I think it's going to be a lot sooner, but anyway, I'll let you continue.
well, uh, a lot of people missed something which came out of the budget in the UK a couple of weeks ago, and that is they're going to redefine what is debt. So the net debt of the UK is going to go down because they're going to start taking into account assets that they own, certain types of assets, and net them off against that debt. So to illustrate that, if, for example, I was to buy a house and I take out a mortgage, I have debt. Now, up until now in the UK, where they have an asset and they have debt, that's counted as debt. And why do they count as debt? Because they have to pay interest on it. I have to pay interest on my mortgage. I don't say I've got a house and I've got a mortgage, so because the one's the same as the other, I can't, it nets off to zero. So if we, by extension, if they bail out a bank, for example, as they did in 2008, and own the bank shares, that will count as an asset and offset the debt, the money that they borrowed. Likewise, if they lend a student some money to study, they'll count that as the asset offsetting the money they borrowed to lend that money in the first place. But that's going to lead, in my opinion, to a lot of shenanigans, because you can imagine when they build a road or an airport or a hospital or whatever, these are investments which they can't sell. They're not really assets of the government. So saying that the debt has gone down because they borrowed the money to buy that isn't really telling the complete truth, because
Yeah,
the
yeah. If you
the
did
debt
that,
is there.
if you did that, or a company did that, private company, um, that the people would laugh at you.
So if I was to have a level of borrowing due to a mortgage, I would have to pay interest on that. Likewise, when the government borrows money, they have to pay interest. So they can't not call it a debt, which is what they are planning to do, just because they have an asset on the other side. Now, they're only planning to do this for liquid types of investments, like investments in shares, in loans, and that sort of thing. But you can imagine the next shenanigan when they build a road or a hospital or something like that. All they have to do is wrap it up inside a company and or inside a company make a loan to it, or simply own the shares, and then they can call it an investment, so they don't have to count the money which was invested. So, if, for example, the National Health Service needs some more money, uh, they could lend it to the National Health Service. Obviously, it's a loan which will never be repaid, but that will count as an investment, therefore keeping the level of government debt down. So I think we have to be aware that the British government has done this particular trick in the last budget. And that's, I think, why the figures for the national debt over the next couple of years is showing as falling as a percentage of GDP, because they're planning to do a lot of shenanigans. But you wait and see. I think other governments around the world will say if the UK can do it, we can do the same. So that's what's going to come.
Yeah, and Clive, I also noticed that what the UK government or the Chancellor wants to do, that she wants to amalgamate loads of the local government pensions, people who work for in the public sector. There's loads of small pensions. She wants to put that into a super fund. Uh, and I think that's really dangerous. And the thinking here is that instead of having 80 funds with 10 billion each, you can put them all together, and the excuse is that they'll be able to invest in riskier assets or whatever. I'm thinking that this is a nationalization of a lot of these funds, even though they're public. And I don't know if you noticed this, Clive, and I'm going to share with you guys right now. Um, I think this is dangerous. And look who's been at Downing Street just I think yesterday, sitting with Keir Starmer, Larry Fink of
I think,
BlackRock.
yeah.
So maybe what the UK is planning to do is sell off a lot of these so-called assets to BlackRock. I don't know, or maybe BlackRock is going to be managing this super fund. I think it's worrying.
Well, the magic trick would be to ask BlackRock if they can securitize all kinds of UK assets like the roads, the ports, the airports, and God knows what. And the more they securitize them, the less a debt will appear to be. So it's a financial jiggery pokey, but it does mean the government will still have to pay the interest on the money they borrowed, even if they're not calling it debt. And when you look at these projections of the way the debt levels are going to go, it means that anybody who's being born today, by the time they're in their 30s, the levels of debt will be 2 to 3 times what it is today, not in absolute terms, but in relative GDP terms. In other words, the debt burden on the next generation is going to be 3 times as much as it is on ourselves. What are they going to do? Are they going to raise taxes to 3 times what they are today? That's impossible. So that's why I tell you, obviously, levels of debt can't go on increasing ad infinitum, because sooner or later, those people who are saying, I love treasuries, I love gilts, they're great investments, sooner or later, some of them are going to turn around and say, I don't want any more, or I don't trust this. And what happens then? Who's going to buy the debt then? So that's when it all goes pop. And we don't know when that is. It might go on for many years. It might happen tomorrow. It's a dangerous situation. And I think if it were me, I wouldn't be having too much debt. And you mentioned a bit earlier, Mario, about the governments of China and Japan reducing their debt.
Yeah.
Not their debt, their holdings of treasury. I think they've got their brain in gear. They're saying we'd rather have a different mix and not be so exposed to governments.
Yeah, it says here it's Japanese investors and also Chinese funds, but I'm sure the governments there as well are thinking hard, and they have been decreasing their holdings of treasuries and actually buying a lot of gold. And you said that in 30 years' time, people that are being born now, they might have 3 times the burden that we have today. I think actually the best hope for them is that it does what you think it could, and that is explode like a debt bomb, because then it would wipe everything out. There would be, of course, a lot of losers. I think the losers would be investors who have bought all these government bonds. Losers would also be people, the public who depend on on payments from governments. They might still get the payments, but it's going to be in a different kind of currency. And Clive, from having seen what's happened in countries like Brazil, the payment that people will get will not equate to anything like before the debt explosion. They always seem to rip people off. I think the only people who will still get something that is meaningful are people who work for the public sector. That's how it always works.
Yeah. Well, history shows us that when a currency fails or goes into hyperinflation or has a reset of some kind, the losers are generally those who hold the fiat currency, the paper currency. In other words, they have cash, they have banknotes, they have deposits in the bank, they have money market funds, they have bonds. Those are the losers. The winners, in general, and it's not going to be 100% like this because there's all sorts of complicated rules according to the country, but the winners in general are those who have tangible assets of all kinds. And of course, the focus of your show, Mario, has very much been on precious metals. And I think people who have precious metals will do extremely well. At least I'm going to say they will come out the other side still earning the precious metals. They'll still be there. But, I would extend that to property and equities if you own businesses, or if you own your own house, you'll be just fine.
Yeah. And what do you say to people who are coming out now and saying that, oh, Elon Musk and Doge, Department of Government Efficiency, they're going to make sure that this doesn't happen because they're going to start cutting government spending, they're going to cut the deficit, and everything will be okay. I mean, I want to hear your opinion on that, and then I'll give you guys mine, if mine is slightly different than yours.
I don't think I think they'd like to be like Milei in Argentina, but realistically speaking, in a democracy, it's very hard to do anything without the approval of government. So yes, I'm sure they're going to try and go through these departments of government like a dose of salt and try and reduce expenditure. But I have my serious doubts as to whether they'll succeed. What do you think, Mario?
Well, I actually think that, like you said, it's a debt bomb, and it's already been detonated. You know, the cartoons when they they
Oh
they
yes,
knock out
the fuse.
the
Yeah.
fuse is lit, and unfortunately, our monetary and economic system are based on debt because the currency we use, the other side of it is debt. So if we try to pay off a lot of that debt and cut that debt and also cut the size of government. There's two things. When you cut the debt, you're cutting currency to the economy. So you're gonna get the economy is gonna contract and go into a recession or worse. And then when you cut the size of government as well, and there's going to be a lot of unhappy people, and I mean public opinion matters. We've just seen that the nominee for Attorney General of the Trump administration, Matt Gates or Getz, I'm not sure how you pronounce it, he just stepped away from becoming Attorney General because a lot of the publicity. So I think it's going to be really hard. And like I said, the fuse has been lit, and it's like damned if you do, damned if you don't. And they're cornered because they've let the debt has gone up so much, and interest rates unfortunately are turning, and they're going to go higher, in my opinion, the next few years or decades. That yeah, whatever they do, it's not going to work. It's just a matter of how quickly it will happen, Clive.
I think we've passed the point of no return as far as the debt is concerned in both the UK and the USA, and probably many other countries too. Um, it, it, so it's only a question of time before the interest on that debt starts to accelerate and overtake and overwhelm the debt to such a point that they have to borrow faster and faster just to pay the interest and to keep spending. We've already reached that point where the interest is rising in on both sides of the pond. The interest is rising rapidly compared with a few years ago for two reasons. Firstly, because the levels of debt are getting higher and higher due to overspending. And secondly, because the interest rate that they have to pay is not the same. It's higher than most of the money they borrowed 5 or 10 years ago. So when they were borrowing 5 or 10 years ago, they were borrowing at a time when interest rates were effectively zero, or as close as makes no difference. So they could borrow a 10-year bond at 1.5% or 2%. Those bonds are starting to come to maturity. They will continue to mature over the next decade or so. And as they mature, they have to renew that debt at a higher rate, and not only renew the old debt at a higher rate, which is, as we know, both in the UK and the USA, the interest rate on 10-year bonds is now 4.4%. It's in both cases, the interest rate has risen despite the fact that the short-term rates are being cut. So they have to pay more, double, let's say, on the maturing debt, and they have to finance an ever-widening budget deficit, which is basically new debt. So you're piling problem on top of problem. Whilst they might have benefited in the last decade from increasing the debt due to the lower interest rates, now it's going the opposite way. One is not cancelling out the other. So those interest costs are set to rise dramatically over the next few decades.
Some people argue, though, that if there's a recession, demand will go down and inflationary pressures will come down and people start buying bonds. I don't believe in that scenario. Do you believe in that? And if you do you think as well, if there's another big crisis, whatever it might be, it could be a war? I mean, in the last few days, we've seen some moves by the West, which to me are nonsensical. It don't make any sense if you want peace, but could they use that as an excuse to come out with a QE bazooka and start buying bonds? And what would the consequence of that be to, let's say, gold?
Well, any sort of crisis, climatic, natural disaster, banking failure, pandemic, war, for example, all of these could be used as an excuse to monetize part of the debt. And when you have these crises, the government needs to borrow a lot of money to spend on whatever the crisis is, and perhaps there aren't very many takers of that debt. Therefore, they'll turn to the central banks and say, we need to borrow some money. Would you please buy it from us? And the way the central bank buys government debt is, and always has been, to print money. So they print the money, that's their liability. They give the money to the Federal Reserve or to the Bank of England, they give the money to the Treasury. The Federal Reserve will give it to the Treasury, or the Bank of England will give it to the government, the Treasury as well. And in return, they receive in England the gilts, and in the United States, the Treasury bonds. So their balance sheet, the central bank's balance sheet balances. But as they print that money, that's basically throwing a lot of money into the system, and someone is getting that money, and whoever gets it is going to spend it on things. Now, they may not be spending it on food and consumer things, because you can only consume so much food, but the prices of things like where you can park your money, which includes gold, of course, should, in such a scenario, rise very, very rapidly.
Yeah, the other thing, Clive, if you look back at history, every major war, what you get after the war is like inflation and a lot of rising prices. So I think we're already in that kind of situation after the what happened with COVID. And I think we're pretty much at war with Russia, unfortunately, indirectly, and it's going to affect things. And I wanted to ask you something else, but I think now I've forgotten what it is. Um, yeah.
I
Sorry.
saw that just a side comment. I saw that a comment on the Office of Budget Responsibility, that as a consequence of the UK government raising national insurance contributions in the last budget, they estimate that 50,000 people in the UK will lose their jobs as a consequence of that rise in
Yeah.
national insurance contributions.
Yeah, I mean, I'm not
Um,
surprised it could be even more. I mean, I think the Office of Budget Responsibility, they don't have a crystal ball, and they usually don't get things 100%. Um, yeah, so
and I also saw that both in the United States and the UK, both sides are forecasting higher inflation than we have and higher interest rates. So, so much for the government's plan or the central bank's idea that they're going to bring inflation down to 2% and interest rates are going to drop to 3% or something like that. It doesn't look like it's going to happen. And we have in December, Jerome Powell and the Federal Reserve's interest rate meeting. It's with the failure of inflation to fall, it's looking less and less likely that they'll be able to cut rates in December.
yeah, I agree with you. And just one final word, Clive. I think it could be the Congressional Budget Office. They were forecasting that if Harris won the presidency, that the deficit would increase by 3.3 trillion or the debt, sorry, or I think it's the debt. I'm not sure, but if Trump won with his tax cuts, it would be 7 trillion. So I saw an interview of Pierre Lassonde recently, and he said the Trump victory is the best thing that could have happened to precious metals, and that he hasn't been as happy as this ever by holding gold and even the mining stocks. So we're going to end it right here, Clive, and maybe you want to tell the viewers something at the end here, some final words, and where they can get in touch with you, maybe.
Sure. So I'm very happy to answer investment questions. I don't give investment advice, but if you're thinking of going down a particular investment route, I can help you see if your plans make sense and help you uh, understand if you'll play your investment themes to me. I'm very happy to talk to people. The way to do that is contact me on LinkedIn. It's the only way to get in touch with me, and I'll try and answer your questions as best I can. I get a lot of questions along the lines of I've inherited a house. Should I keep it and rent it out, or should I sell it? Or where can I buy some gold coins? All kinds of questions. So whatever you've got, I'm quite happy to answer them. I won't tell you whether the price is going to go up or down, but I'll tell you what I would be doing in your situation if you want.
Yeah, and before we go, I'd say that having some of this is like having a bomb shelter when the debt bomb goes off. A bit of gold and also silver, of course. So, Clive, I wish you a great weekend and all of you as well, and we'll talk later.
Thanks, Mario. Great weekend.